Hello everybody, welcome to this Your Overseas Home webinar, today focused on managing your money and finances when making the move to Spain. My name is Hannah Armstrong and I'm one of the team here at Your Overseas Home. You may have already come across us as a business and you may also know our sister business, Property Guides. As a whole, our companies have been assisting buyers with their purchases for over 15 years now. We do this by sharing valuable resources, connections, and information with you to help you try and sort of save any pitfalls in this process, save you money, and enjoy it as much as possible. We're delighted to have you all with us today, whether you're listening in with us live this morning or catching up with us on demand, and we're excited to be able to support you in your journey. So today I'm joined by two industry experts in the field of money and finances. First up, you'll hear from Paul Harris of Smart Currency Exchange, and then next up I'll introduce Jason Swan from Holborn Assets. Now, for those of you who are listening in live with us today, if you've got any questions that you want to put to Jason or Paul, please do pop those in using the questions tab on the right hand side of your screen. You'll also see that there's a polls section there, and we've got a question for you, the audience. So if you don't mind answering that poll, that will help us tailor today's session. But all your answers in there and all your questions will be confidential. So you've heard enough from me by way of my introduction, so I will now hand over to Paul. Just to give you a little bit of background, Paul's been helping buyers managing their currency transactions for over 10 years now. He and the Smart Currency Exchange team are based here in the UK and are on hand regularly to be able to support you with any of your currency transfer needs. So I'll hand over to Paul and ask him to start by giving an introduction and a bit of background into Smart Currency Exchange and how they can support you today.
Thanks, Hannah. Morning, everyone. As Hannah said, I'll be talking to you about how Smart can help you this morning. And really assist you with the buying along the journey of the buying process when you're buying over in Spain. A little bit of background about Smart. We've been around in the industry for over 15 years now, and we've helped over 40,000 people in exactly the same position as yourselves to really help achieve and afford the potential properties that you're looking to buy over in Spain. We look to primarily manage the risk for you. So the risk associated with a currency transaction, the risk associated with currency movements. And for those of you that have already registered with us, you may have already spoken with one of our account managers, and their job is to take the stress out of the transaction for you and really manage the risk and keep the cost as low as possible for you when you're transferring funds over into Spain. Yeah, that's there you go.
That's great, Paul. Thanks so much. Now, in terms of sort of the buying journey and the process, how early do customers need to start thinking about currency? You know, is that straight off at the bat at the beginning, or is it something they kind of wait to deposits and completion stage?
We say as early as possible, really. It's a common thing that I say in these sessions. But when you're looking at properties for the first time, you may be searching online, looking at a website with various different properties. You'll be looking at a certain area in Spain, certain property type, how many bedrooms, does it have a swimming pool? There will always be a price point that you'll be looking at. So you'll be filtering by lots of different things, but you'll also be filtering by a price as well. So that price will primarily be in euros. So we can help you from a very early stage to help you understand your UK sterling budget, or whichever currency you hold at that time, and how far that budget can go into euros, and if the properties you're looking at are affordable. So we say as early as possible, really, so we can really start working with you and then help you understand the costs associated with the transfers.
That's great. Thank you so much, Paul, and great advice for everybody listening today. Now, I know that Smart has a variety of different sort of services and different types of transactions that you can offer to the customers. Can you talk us through today the different options and solutions that you offer?
Absolutely, yeah. So if you've done any research already, you may have seen the two types of contracts that we offer are spot and forward. The difference between the two, so for example, if you're looking to book a spot contract, that's a quick transfer basically. So you'll agree an exchange rate today, send the money to us straight away, and we'll send the money straight out. We'll get the market price at the time, and the money will be processed very quickly and into Spain same or next working day from when we receive the funds. A really popular product that we offer, however, is a forward contract. The reason it's so popular is because it gives you a peace of mind and takes all the risk away of any market movements. And I'll talk a little bit more about how that all works. So, as I said, a spot contract is agree today's price, send the money today. Very, very quick and efficient service. But if, for example, you found a property in Spain, you're on a viewing trip, whatever that might be, or a virtual viewing trip, or you found a property online, you fall in love with it, you agree, I want this property, I'm going to sign for it. So at that point, you've agreed a price, and that price is agreed in euros. Now, the time between you agreeing the price and actually completing the contract could be anything around 3 months, for example. So if you've agreed that price in euros, that price in euros is going to stay the same. What is always going to change in the time between you signing and actually completing is how much that's going to cost you in pound sterling or whichever currency you're holding at the time. So what a forward contract does is it takes away all that concern of exchange rates moving against you. So, for example, if you're happy with the exchange rate today, but you're not completing for 3 months, you agree the price today. We fix that exchange rate for you, and that rate is guaranteed up until the point that we've booked that contract for you. And we can do that up to 12 months for you as well, so that we can hold those contracts open for a long period of time. The way it works is very simple. You agree how much we need in euros. We tell you how much that is in pounds, and then that's fixed in. We then buy the euros for you and hold the euros ready for the completion date. All we would ask for you at that point is 10% of the full contract cost. So it's not a fee. It's just a 10% of the total cost of the contract. So that 10% would be held with us just to guarantee the contract for you. And then on completion date or before the completion date, you pay the remaining 90% balance. And then through that whole period between agreeing the price and completion, you've got full peace of mind of how much it's costing you in euros and how much it's costing you in the currency you're holding at the moment, let's say sterling for this example. So it gives you real peace of mind that if there were anything to happen with the exchange rates, if they were to drop, you are still guaranteed the exchange rate that we pre-agreed for you. So it's a very popular product as soon as people have agreed a price on a property. There are a couple of other options for you, and they're both called orders. So it's an order to call or an order to buy. Now, so for example, if you have agreed today, you've agreed, sign on the dotted line, you have your price in euros, but the exchange rate isn't really what you want it to be. You want it to be better. So you want if it's, let's say again, for example's sake, you want it to be cheaper in pounds. So you want the exchange rate to be stronger for the pound. We can put an order into the market for you and say target a higher rate than where we are currently. Really important to note at this point that if we are doing this, we're not guaranteeing that we're going to get you that exchange rate. We'll keep tracking the market for you, and if that rate is hit, great. If it's an order to call, we'll give you a call, say, look, your exchange rate's being triggered. Would you like to move the money now? Or if it's an order to buy, we would hold the funds ready for the transfer from yourself. So if the exchange rate is triggered, we send the funds straight out. And again, great for yourselves. You've got the exchange rate that you wanted. But like I said, it does come with a little bit of risk because we can't guarantee that exchange rate. So in that time where we're targeting a higher rate, the market could be going against you. So there are some slight risks with that as far as the currency exchange is as far as the exchange rate is concerned. But yeah, all very popular products. But the most popular with property buyers is certainly the forward contract.
That's great, Paul. Thank you so much for that fantastic introduction. Now, we've had a couple of questions in. Both Sue and Gary, who are listening today, have asked, what are your fees for the different products that you just talked about?
So we don't charge any fees at all on any of our contracts. So like I said, there's a deposit for the forward contract, but that's not a fee. It's just a part of the overall cost. So it's not a fee. We do make money, obviously, as a business. So if you're Googling sterling euro on Google, you'll see a certain price at the moment. That's called the market price or interbank price, and it's where the banks will be trading with each other. Now, when we're booking transfers for you, we can buy currency very close to that exchange rate from the banks, and the rate that we offer you will always be slightly different to that. And the reason, and that's basically where we make our money. Sorry, so between the price that we buy from the bank and the price that we offer for you, that's where we make our money. But the price that we offer for yourself will always be the exact price that you're getting. There won't be any hidden fees or any charges after we've transferred the funds. it's all just set. We make our money in the market price, so we don't charge you at all for the service.
Brilliant. That's great to hear. Thank you so much, Paul. Now, Anne has asked about the property buying process. So she's asked, do you sort of do a combination of spot and forward? So, for example, would you pay your deposit for your property with a spot contract, and then for the balance that's due down the line, would you then arrange a forward contract? Is that maybe how that would work?
Can do, yeah, can do. You can book a separate contract for the deposit. That's absolutely fine. Something that with a forward contract, it gives you a little bit of flexibility as well. So as I said, we buy all the currency for you for the full price of the contract. So if you're wanting to pay a deposit and the balance with one big contract, you can book a forward contract for the full amount, including the deposit and the actual full property purchase price, and we just take part of that forward contract out. Obviously, you pay how much you need out of the contract, and we send it out from there. So you can do it. You can pay off part of your forward contract to pay for the deposit, or if it's easier for yourselves, we can do the deposit as a spot contract and the full property as a forward. There's a lot of flexibility with it.
That's brilliant. That's really helpful, Paul. Thank you. And I hope that answered your question, but we will make sure that we get you in touch with Paul, and you can discuss your sort of particular circumstances if that's useful. And for anybody that's got any particular questions, we will share Paul and his team's details at the end, and they'll be able to answer any queries directly that you have. But moving on to our next question, Sue has asked, if she was to book a forward contract, but then property purchase was to fall through, or there was a change in circumstances, are you able to cancel a forward contract?
Yes, you are. It's as I said, we've been in the industry for long enough to know that things will happen with property purchases. You may get cold feet and decide that actually this property isn't right for you. You may have found another one. You might be in a chain, and various things will affect it. So yeah, absolutely, you can either cancel a contract, or if you are still looking to purchase and you just this property hasn't worked, but you're still looking within the same time window, we can potentially roll a contract for you. We can add funds in or reduce the amounts as well. So they are flexible. One thing to say, if we do cancel a forward contract, way it works is we sell the currency back. So as I said, if we agree a forward contract, we'll buy all the euros for you today, and we'll hold those euros for you. If we cancel, we sell those back. So if there are any losses, it could potentially come out of the deposit. We wouldn't just cancel it out of hand and just say, okay, right, there was a loss on that, so it's going to come out of your deposit. We would always be transparent with you and let you know if there are any losses, and if there are any potential losses, we can try and work on that. Potentially keep the contract open for you a little bit longer if that's what you wanted to do, just to see if we can avoid those costs. So we'll always work very closely with you to avoid costs at all costs, basically, for you.
Brilliant. That's really reassuring. Thank you so much for answering that, Paul. Now, Peter's asked a very interesting question. He said, what does he have to use a currency company such as Smart, or could he use his bank, or perhaps a payments platform like Revolut or something like that? Can you just sort of explain to us the difference between all of those different services?
Absolutely, sure. So if we start with the banks, the banks, you won't get quite the tail, you won't get an account manager for starters, and the exchange rates you get aren't favourable to yourself as individuals, and they're not always very transparent in what you're going to achieve. So the difference between us and the bank is cost for yourself. We can keep that costs much lower. We're able to achieve better pricing for you, and you are obviously getting the tailored service where we can actually start timing things for you. A bank will only offer a spot contract, won't offer a forward for you either. So that's the main difference with the bank. Companies like Revolut, again, it's online, don't offer forward contracts. It's still great services. I mean, I'm not on this call to badmouth any other companies. That's not us. What we're here to do, but you aren't getting that tailored service, and when you're looking at large sums of money, certainly for a property purchase, then having that person to speak to, and it gives you a little bit extra peace of mind, and then obviously with the additional services that we can offer with orders and forward contracts can really be of a real benefit for you. So there are subtle differences. Using a company like ourselves, you just get the full package, basically. Full round service, and it doesn't cost you any money to use it. So Yeah, there are a lot of extra things that we will offer.
That's brilliant. That sounds fantastic, Paul. Thank you. And I hope, Peter, that answered your question. Anne has asked a really interesting question. She said, could you give an example, if she were to book a spot contract today, what the sort of difference in rate might be with Smart versus a bank? Are you able to shed any light on that, Paul?
Yeah, absolutely. I mean, I don't have the system open in front of me at the moment, but typically we would say the difference between us and a bank is around 3 to 4%. So the banks will charge a big fee in the exchange rate for transferring funds. If they didn't, companies like us wouldn't exist. If the banks were offering great exchange rates, then we wouldn't be needed as a service. So yeah, it's a significant saving between us and the bank, and typically it's always been around the 3 to 4% mark.
That's brilliant. So that, I mean, it shows how it can make a real difference in you know, in the size of a property purchase. That can make a huge difference. Thank you, Paul, for clarifying that. Now, Jonathan's asked a really interesting question. Do you just deal with large scale transactions for property purchase, or could you do something, say, on a regular monthly basis for pensions or income, things like that?
Yeah, absolutely. So yeah, there's a common misconception that we're only helping for the actual property purchase itself. But as I said, we've been in the industry for long enough to know and understand that the buying journey doesn't end when you buy the property. So if it's a holiday home, for example, you'll have ongoing bills or potential renovation costs that you may start a project on doing up the property. Or if you've moved over to Spain and you have, say, a pension income, or you have family back in the UK or whichever country you've come from, you can send smaller amounts to and from Spain. So it can go both ways. And just on the monthly payments that you mentioned, we can set up what's called a regular payment plan. So it's as the forward contract, one of our most popular products that we offer. So for example, I'll give you a couple of examples. If it's a holiday home, you're staying in the UK, for example, and you have monthly bills or fees on the property that you need to pay each month, you'll know how much that's going to be each month in euros. We can set up a regular payment plan, which again fixes that exchange rate for 12 to 24 months. So you'll know on a standing order basis, you'll know exactly how much to send us each month in sterling, and it covers that, and your bills are all secure and paid for over in Spain. Alternatively, if you've moved to Spain and, for example, you're drawing a pension income, again, works exactly the same way. We can set up that regular payment plan to be either 12 to 24 months. You'll know exactly how much you're getting in sterling each month, and then we can transfer that over into euros at the pre-agreed rate, again on the standing order basis. So yeah, two very popular things that we do for clients on that regular payment side.
Brilliant. That's really helpful, Paul. And just to quickly ask, Karen's also asked, does that apply as well with mortgage payments and things like that? The same principle, you can use Smart to pay regularly or lump sums off your mortgage?
Yeah, absolutely. Yeah, whatever the reason is, we can help you. Ultimately, if it's unless it's something that's maybe deemed as a higher risk transaction, which it wouldn't be in a mortgage payment or loan payment or anything like that, then yes, we can absolutely do it. That's no problem.
Brilliant. Thanks, Paul. I think we've got time for one last quick question there this morning. We've obviously talked quite a bit today about the differences between Smart and between a bank. Customers have just asked, how can they guarantee that their money is safe with Smart?
Yeah, I mean, great question. I mean, when you're purchasing a property overseas, it's often going to be life savings, remortgaging a property. There's a lot of money involved. When you're sending money to Smart, the money comes into a client holding account, so it's completely segregated from Smart accounts. So we're fully authorised by the FCA and governed by HMRC, so we're fully regulated as a payments institution to start with. But if you send the money to us, and for any reason, in the unlikely event that we went into any financial difficulties and we're bankrupt, if we're holding funds for you, they are in that client holding account. So they would be returned in full to the original bank account that we received the funds from. The £85,000 guarantee that I'm not sure if it is part of the question, but that people may have heard of, is related to the bank. So if we're holding funds and the bank goes bankrupt, that's slightly different. But again, very unlikely that would happen. But that would be then when the 85,000 comes into play. But if it was Smart, the money would just be returned to sender, basically, in full.
Brilliant. Thank you, Paul. And I hope that puts people's minds at rest who've asked that question. I think that's about all we've got time for with this section of today's session before we move on. So thank you so much for all of that, Paul. As Paul mentioned, it's never too early to get in touch with him and his team at Smart to talk about your different plans. So I will make sure that we share Paul's details at the end and also send them to you via email next week, so you're able to get in contact with him and his colleagues. So I now want to move on to our second panelist of the day, Jason Swan from Holborn Assets. So Jason works closely with expats all over the world, specialising in areas including banking, tax, planning, investment advice, and UK pension transfers, which I know we've had a few questions on already today. Jason's made the move from the UK to Spain himself 5 years ago, so he really understands the process and all of the sort of questions and issues that you're facing at the moment. So welcome, Jason. I'd love it if you could start by giving us a bit of an introduction to your business and how you are able to help the customers today.
Yeah, of course. Good morning, Hannah, and good morning, everyone. And nice to be on the webinar this morning. I'm Jason Swan. I'm a senior partner from Holborn Assets, and we are an international financial planner. And we have clients all over the world. We have clients in over 100 different countries, and we have advisors that specialise giving financial advice to expats in each one of those countries. As you said, I moved to Spain myself 5 years back. So I've kind of been through the trials and tribulations myself, and kind of speaking now from experience, and of course holding my clients' hands to make sure, of course, once they bought the house, they've then got enough money to last them and enjoy their life in Spain, of course.
That's great. Thank you so much, Jason. Now, from the polls that we asked at the beginning of the listeners, tax was certainly one of the sort of key issues that people were most concerned about with their relocation. So if I can start with a few questions on sort of taxation, and I think the big one that everybody wants to know, are they going to pay tax in both the UK and in Spain? Can you shed any light on that for the listeners today?
It is very important you get some good tax advice in Spain. There is a tax treaty between Spain and the UK, which means that you cannot be double taxed in the two countries. However, it is important that you do have someone doing the tax returns in Spain and making sure you're making the necessary declarations in Spain as well. And if you get some good advice, then you won't fall short and you'll be okay.
That's brilliant advice. Thanks, Jason. And in terms of sort of savings and investments and things like that, are ISAs and premium bonds still tax-free as we experience them in the UK if someone then relocated to Spain?
Unfortunately not. As soon as you become a tax resident of Spain, all the kind of tax-free benefits and of things like ISAs and premium bonds all of a sudden do become taxable in Spain. Your fund has an annual declaration where you must declare any assets that you still hold back in the UK. I call the Modelo 720, anything certainly over the value of €50,000. And Spain will look to tax both income and kind of investment growth and interest thereon in Spain as well. So there are solutions to that. There are products designed for Spain which will offer tax benefits as you become a Spanish tax resident. For our clients, Hannah, we often don't recommend holding lots of money in Spain for various reasons. As you move over to the EU now, we often talk about the benefits of holding certainly large sums of money in the likes of Dublin, possibly in the likes of Luxembourg as well, really for two reasons. First of all, from a security perspective, you'll find some of the very best levels of investor protection and security due to the high levels of regulation, certainly compared to Spain. And also it can be, like I said, that much more tax efficient as well than keeping money back in the UK or bringing it into Spain.
Great. So just to sort of clarify then, you'd advise in the main that people don't keep money here in the UK, but they explore other options with you as to where's best to keep it, I suppose.
Yeah, I mean, there's worse places to hold money than in the UK. You know, the UK is one of the most well-regulated parts of the world. However, it no longer offers the best tax efficiency as a Spanish resident. So yeah, it's worth exploring what other jurisdictions you can hold savings. You've got to be very careful about really all of your banking in Spain, all of your financial transactions. It is a bit of a, it's very much like the UK, but 20, 30 years ago when it comes to sets of banking and savings. So yeah, maybe not keeping in the UK, but utilising other jurisdictions, as I say, like Dublin or Luxembourg, and you can still enjoy those benefits of the UK from security point of view, but also they can be a better taxation than, like I say, in Spain and back in the UK.
Great advice, really fantastic. Thank you so much, Jason. Now, Val's asked a question this morning about capital gains tax. So if Val were to purchase property in Spain and relocate there, but keep a property in the UK, which she then subsequently sells, is she liable for capital gains tax in Spain on that UK sale?
If you sell it, it is important that you sell before you become a Spanish tax resident. Once you reach that status, once you've lived over 183 days in Spain, and you then sell your main residence, then yes, you may be liable to capital gains tax. Of course, we would look at that in finer detail before formally giving that advice. But yes, be very careful of that. And often works out better to sell as a UK resident if it's your main residence rather than your previous residence as a tax resident of Spain.
Great advice, and Val, I hope that answers your query there. Now, moving on, we've had quite a few questions come in about pensions. I do know that a number of our listeners today are looking to relocate for retirement, so pensions are certainly going to be a really sort of key issue for them. I guess first off, starting with the big question, should it be kept in the UK and use, Paul and his team at Smart to transfer it over, or can you transfer a whole pension to Spain?
Again, the same rules apply in certain ways, Hannah. Again, I wouldn't be recommending you move pensions to Spain, but again, there are certain jurisdictions where you can move a UK pension overseas, which again can enjoy a number of benefits that you wouldn't receive if you kept it in the UK. But no, I wouldn't be recommending to Spain, but yeah, more often than not, it makes sense to move your pension in some way, and there are different options. Quite often we look at moving to an international SIP, which is a self-invested pension plan. Or you can also look at something called a CUROPS, which is a qualified and recognised offshore pension scheme, both of which carry various benefits, and ultimately the advice to move into one of those will depend on our client's circumstances and what they're looking to do.
Thank you. And Jane's asked about the tax on pension income. How does that work if she's getting monthly income from a pension? Is she paying any sort of Spanish income tax on that?
Yes, Spain will be looking to tax your worldwide income. But again, just be mindful that you won't be double taxed if you plan effectively. But yes, as you become Spanish tax resident, it'll be Spain where you'll be looking to pay the majority of your taxes.
Great, thank you. And I suppose that moves on to lump sums from pensions. Are there any sort of tax-free lump sum drawdowns out of pensions that you've got any advice on that you could share with us?
Yeah, sure. Certainly for those looking to retire in Spain, of course, I'm sure what you've been looking forward to is that lump sum. And the last thing that you want to do is all of a sudden find that it's not a tax-free lump sum. So my advice is always to the best of your ability, take that as a UK resident. It is a tax-free lump sum as a UK tax resident, not necessarily as a Spanish tax resident. So more often than not, we would look to make sure we manage that withdrawal, but then ultimately, then the remaining pension would be then transferred into something that can give that ongoing income in a much more tax-efficient way than drawing from the same pension back in the UK.
Great advice. Thank you so much, Jason. It's fantastic. There's so many questions coming in this morning, so I'm going to try and get us through as many of them as possible. Now, moving on a little bit to bank accounts. So, do you have any advice or recommendation? I know you talked about Luxembourg and Dublin earlier. Do you have any advice on who customers should bank with in Spain? I'm assuming they're going to need a current account for day-to-day usage. Any advice you can share on that?
Yeah, one top tip, Hannah, and in fact, you've got to be really careful of bank charges now in Spain. It's very difficult to find a bank that doesn't charge you for pretty much every transaction that you do these days. So I won't mention any names in particular, but yeah, some banks charge more than others for receiving payments, going in between currencies, and that's where again it works well to work with Smart. And yes, I've learned through personal experience those to stay clear of, and those that you should be looking at. And for things like Dublin and Luxembourg, and that's more for kind of large lump sums, so it's kind of securing your life savings rather than your day-to-day banking. Day-to-day, you just want to make sure that you've got a bank that isn't going to be charging you a fortune for receiving money from another country. And things like withdrawals, make sure there's no withdrawal limit if you're going to be using the cash machine. And then for the majority of your savings, again, Spain is not as well regulated as the UK. Spain is able to dip into your account. If there's an unpaid bill, or if they see there's some reason to actually take money off your account, you don't have that same security as what you would do if your money was with the likes of NatWest and Barclays. So day-to-day, yes, just pick a good cost-effective bank. Make sure you use a good exchange company for currency exchange, and then for the majority of your savings, you want to hold that, like I say, in a secure jurisdiction like Dublin or Luxembourg. For the majority.
Great, thank you. And a few more questions on bank accounts. Sue has asked, do you have to have an account in Spain if you want to be resident in Spain?
Yes, you do indeed. You don't necessarily need to use it. However, you'll find that getting a bank account set up will make your life a lot easier. Applying for things like your NIE, for applying for rental contracts or for a house purchase. And it's a good idea to have one, but yeah, whether or not you ultimately use that is up to you. So I would say get a bank account. As to whether or not, how you use it is then ultimately up to you.
Great, thank you. And Martin has asked, do you get taxed when you're making deposits into a Spanish bank account? So, if Paul and the team at Smart make a transfer for you, or if you were to deposit cash, do you get taxed at that point when putting money in?
Not by default, no, but you do need to be careful. It is very easy to be seen as an income, and if you don't make the necessary declarations, quite often, like I say, there has been occasions where our clients have seen their own savings coming into Spain as an income, and they have been tried to be taxed on that. So no, you shouldn't, but it can be. So just be mindful of that, and again, just seek advice from myself or from the bank, just to make sure that you've done the necessary paperwork and that you don't fall short.
Brilliant. Thanks, Jason. Great advice. This is fantastic. There's so many questions coming in, and I hope we're answering as many of them as possible. Now, we've had a few questions about income, so I'd like to ask a couple of questions on that topic. People just wanting to understand, will they have enough income in retirement? What sort of income levels do you need in Spain? Firstly, on a sort of cost of living point of view, but then also, is there any amounts that you have to prove to Spanish authorities for your residency?
Okay, so first of all, when it comes to income, ultimately you just need to plan carefully. Budget. It's always best to budget more income than you need, than try to do it and end up with less than what you need. You want to try and put things in place where, you feel comfortable. You don't want to be worrying about money. You don't want to be dipping into your savings unless absolutely necessary, and you want to make sure that you've really sat down and thought about what things are going to cost. As far as how much does it cost? It ultimately depends on where you live. There are parts of Spain where you can live very affordably. You can live, out in the sticks, and you can, as long as you cover your food bill and the electric, you'll be okay. There's, of course, if you move into a city centre, you'd expect much higher cost of living. Of course, it depends on how active that you are as well. How often that you're travelling back to the UK to see family. Where you're going to be travelling to at the weekend. In the grand scheme of things, I don't think it's hugely different. I was from Manchester, Hannah, back in the UK. In comparison with Manchester, the living costs are not particularly different. I'm in Porto Banús towards Marbella, which generally is one of the more expensive parts of Spain. But yeah, it's not hugely dissimilar to what you generally expect in the UK. But just make sure you sit down and plan out your money, and make sure you've got provisions in place if there was an emergency. If you do feel that you're a little bit short on income, but you do have savings in the bank that perhaps you're not getting any interest on, there are ways of generating extra income to supplement things like pension income, to give you that bit of a boost and really be able to enjoy it. I often find, Hannah, that when retirement can be one of two things, really. It can either be the best time of your life, and you find yourself with all the money that you need to go to the places that you want to go to, and buy the things that you want to buy. But also, if you don't plan properly, it can be quite the opposite. You can find yourself with lots of free time, more time than you've ever had, but not the money, unfortunately, to support the lifestyle that you want. So yeah, we'll always help clients to budget for that move to Spain. We'll have a look at the expected outgoings, and yeah, we'll look at what disposable income there is. We'll have a look at other assets that things like premium bonds again, and ISAs and other savings, as to how we can use those to increase that income if needed, ultimately as well. And yes, coming to the second question, for things like a visa, things like what's changed now kind of post-Brexit. Unfortunately for everyone on this webinar, Brexit is not going to prove to be perhaps the most convenient of things to happen over the past year, because it has made life a little more difficult. And the main thing being that for applying for a visa, previously a visa was not required, and you could kind of move quite freely between each member state. However, now you must apply for a visa. You can apply really for, there's a number to choose from. The two most popular visas are generally what's called the non-lucrative visa, and also the second option for those looking to buy a house for over €500,000. They can apply for a golden visa. But yes, you must be able to evidence enough initial capital at the point of applying for that visa, but also the ability to support yourself as far as an income when you're here as well.
Brilliant insight and advice there, Jason. Thank you so much for that. A couple of other questions on income. How easy is it to rent your home in the UK and then get that rental income money to Spain? Obviously, we've talked with Paul about transfers and the logistics of that, but what's the sort of tax position? Are you paying tax in the UK and Spain on that sort of income?
It depends on what that income is, Hannah. I mean, you'll have a tax allowance of just over £10,000 in the UK. So ultimately, it depends on what that rental income is going to be. But as far as kind of getting it over to Spain, yeah, the options. You've got various options. You can have that rental income paid directly into Spain. The majority of my clients keep that income in the UK. And then move that over as a lump sum, perhaps, as time goes on, as those savings build up. For those that have a mortgage outstanding on the property, you're going to need to keep that money in the UK to cover the mortgage, of course. But yeah, of course, when you get to that point of transferring over, that's a good time to speak with Smart, for example, and make sure you do that in the best way.
Thank you. And obviously we have talked quite a lot here about pensions, about retirement, but we do have some customers who are listening who are still working. What would the position be if you wanted to continue working from home, but for a UK-based employer, but live in Spain? Obviously, with the way the world's going at the moment, quite a lot of people are making that change. Is that possible? And how would customers kind of manage the finances around that?
Yeah, it's possible. Yeah, but yeah, you're right, Hannah. More now kind of working remotely, and it kind of opens up the window of opportunity for not working remotely in the rain, I suppose, and like you say, moving over to Spain. But if you are in an employed role, of course, first of all, it is down to the employer's discretion whether or not they would allow their employees to move abroad. But also by default, they pay your tax, your social security in the UK. So the conversation that you would need to have with the employer is whether or not they could pay you perhaps gross of tax and not make those deductions, almost on a self-employed basis in a way, where you can then take that income into Spain and pay taxes here in Spain. And ultimately then you would be, you'd be a Spanish tax resident with an overseas income. And that's quite straightforward to document and pay tax here in Spain.
Great, thank you. I'm conscious of our time this morning, but there's a couple of more questions that a lot of people have asked that I really do want to get answered. And as with Paul earlier, we will put Jason's details on screen shortly for any of those personal questions and personal circumstances that you do want to discuss, because we're not going to get through everything today. I think we could talk for another hour on this because there's so much to cover. But I wanted to just sort of move on to the topic of inheritance, really, because as again we've talked about, it's going to come to us all, and people do want to sort of plan for those next steps. So can you give any advice on what the inheritance rules would be, both for sort of financial savings and investments they might want to pass on, but also passing on property to the next generation?
Yes, the first thing to know, one very popular way of reducing death taxes and inheritance taxes in the UK is by using a different type of trust. Or ultimately, you gift parts of your estate to a trust provider, and then over time you can reduce the tax due on your estate. Now in Spain it's a little different because it's not the estate that pays the tax, it's the beneficiaries of the tax that ultimately will pay that tax, if of course liable for that. And trusts are not formally recognised in Spain. So the bad news is that if you are utilising a trust at the moment, you need to really rethink, how you look to kind of plan your succession ultimately. So as far as the taxation, for example, in Andalusia, there's a 99% allowance. So and it varies depending on the different jurisdiction that you move to. But in Andalusia, as an example, 99% can pass to children free from taxation. So it might not be quite as bad as you're thinking, but that doesn't apply if it's not a direct, or should I say, an immediate family member. So yeah, there are various ways of planning ahead and mitigating death taxes. There's also, of course, the topic of making sure you have a will. I would suggest having a will it's written in the UK, certainly to look after your UK assets. But it's also a good idea to have a Spanish will as well, which ultimately work in conjunction with each other. And then when that day does come and you meet your match, at least everything's going to pass to the right people at the right time.
Great, thanks, Jason. And just one last question on inheritance. What if a customer listening is resident in Spain, but they inherit from their parents in the UK whilst they're living in Spain? How would that side of it work as well?
So if they are the Spanish tax resident, then yes, they may be liable to taxation depending on what municipality they're in Spain. But if they are resident in Spain, if they receive a lump sum from parents, then yes, they may be Spanish taxes. And there are also maybe UK taxes as well. Just a kind of a quick point on the UK. There is a tax allowance for inheritance tax of £325,000 for a parent. And of course that doubles as a married couple. So it does allow you to, to pass a sum of 650,000 tax-free to children. But that isn't necessarily, that isn't going to cover you if the beneficiary is living in Spain. So yeah, got to be mindful of both sides. And again, that is a big topic. If you don't plan effectively for succession, you might find, maybe not you, but your family could miss out. So it is, really good. I'm glad you asked, actually, Hannah, because it's probably one of the most important topics, really, and one that is considerably different than what you might be used to in the UK.
Brilliant. Thank you so much, Jason. As I say, I feel like we could continue to chat on this morning about all of this because there's so much to cover, but I am conscious of our time. So what I've done, I've put Jason and Paul's contact information on the screen there, and I would strongly recommend that anybody listening who wants to ask further questions or ask about your specific financial requirements, anything like that, please do get in touch with those teams. They are really well placed to answer these questions and support you in this next step, and just make sure you save as much money as possible and your wealth is protected for the future and for the future generations. So thank you to Jason and Paul for that fantastic insight. I'm also going to pop a link on the screen now for the Your Overseas Home website. We've got some other sessions on there that focus on these topics and other aspects of the buying process that you might want to also have a look at on there. So do pop on there if you want to see any of those. And we will drop you an email next week to reconfirm these contact details and share the link for the replay of this session if you want to refresh your memory on anything that's discussed, or pass it on to friends and family. So thank you all for now. Thank you, Paul. Thank you, Jason. And thank you to everybody listening, whether it's live or whether you're catching up with us on demand. It's great to have you with us, and we wish you a really, really happy and exciting move to Spain. Thanks, everyone. Bye.
Thanks, Hannah. Bye-bye.